Hello. Today I wanted to go through the second model that I currently am trading for the NASDAQ. And I call it the Phoenix model, just to be creative. But this model is based on more of a reversal play towards the 5 minute opening range. So if you remember from part one, which would be the Titan model, this one is more a momentum breakout of the 5 minute opening range. So this is a second idea that might play out during the trading morning. So I wanted to go through it with you guys. So here's a disclosure statement. Obviously, this is for educational purposes. I'm not a professional financial advisor, so trading is risky, and obviously just take this as entertainment. Okay, so the model, like I said, it's a 5 minute opening range. I call it like a reversion play going back towards the opening range. So let's get right to it and first start out with my credits to others for the education I've received. Now, some of these plays are during macro times, and I've gotten some ideas. Also, some of the concepts and terms from Real Trader Tim and also ICT, obviously. So the windows to execute are similar to the first model. Mondays and Fridays, we would start hunting starting 10 a.m. and we would end by 11:15 a.m. End meaning no longer searching for an entry, but you might still be in a trade. Tuesday, Wednesday, Thursday, due to news volatility, primarily we can start hunting 9:35 a.m. Now, I will tell you that this play works really well during the macro time. So typically a Phoenix play would start maybe 9:50 a.m. and forward. So we'll check some examples so you can see what I mean. Our preparation is similar also. So the preparation is the same for all my models. I just start the day at 9 a.m. Eastern. I have the 5 minute chart up, and I'm going to mark out all my key areas of interest. Previous day high and low, the middle of previous day, my session highs and lows. Those are my range. Those are my time sessions for Asia and London that I use. And then optionally, you can add in new week opening gaps and new day opening gaps. I do use 3 new week opening gaps and usually 1 or 2 new day opening gaps because it becomes very busy on the chart. But a lot of times I'll also just take a glance at it and then I'll hide that indicator so I don't have to have a million lines on the chart. Just be aware of these key areas. Okay, at 9:30, we're going to allow the first 5 minutes to play out so that way we can get the 5 minute opening range. And at that time, we'll outline the high, the low, and the middle of that first 5 minute candle. Afterwards, you're going to zoom down to the 1 minute chart and it should look something like this. So we have the first 5 minute candles, and here we have the range. You can use a rectangle box and just have it with the mid showing, or whichever way you like to do your ranges and zones. So I use a rectangle box just to keep it simple. And that's how we would start the day. Now, the entry criteria for this specific model is a little checklist. I have an A checklist and an A plus checklist that just has an odd enhancer that really makes that nothing's 100%. That's not what that means. It just means that it may have higher probability of working out. So the A setup, which is still valid for me and I'll take it, is it has to hit a key area of interest. So one of the area of interest that we have already prepared for in advance. That's number one. Number two, you want to see an immediate sweep on the 1 minute chart, meaning like a little baby sweep. What I mean by that, it means it sweeps and comes right back into the mini range. So I'll show you what I mean by that with a visual. And then you're going to have an inversion fair value gap for your entry technique. You could also use a change in state of delivery. Some people like that sort of entry. I really like inversion entries. Okay, on top of that, to make this an A plus setup, it would also have SMT with ES when that setup occurs. The final one that really gives it a A++ is that this happens during a macro window. So 9:50 to 10:10, 10:50 to 11:10, like that. I would stop after that macro because, like I said, I stop hunting at 11:15. So there's only 2 macro windows that this can be enhanced with. So let me show you visuals now. So this should be a bullish Phoenix example. And So I have my opening range outlined. You can see the gray box here, high, middle, and low on the 1 minute chart. And as you can see, we don't have any. First, we can be hunting for a tighten play. Now, I'm going to have another video that sort of shows how I would check one and then how I would check for the other, sort of how the day would play out, because I could see it getting confusing. For example, here you have the close out, then it produces a fair value gap down here. You may say, okay, I'm going to get in short with the tighten. The problem is this has hit Asia lows, this has not. Again, SMT, remember I gave you that as the warning, the red flag to not take a tighten when you first see that. So this sort of gives me an indication that we might have a reversal from here, given that SMT and the time of day. This is basically around the macro time. So that's just a little preview as to how I put them both together. But basically, this is the checklist right here. You have the higher time frame level. So this is Asia lows, overnight lows. Then you have the mini sweep. This is what I meant. You have an immediate sweep and you come right back in. You're not going to have 75 candles going to the side like that. That's not going to work out in a lot of cases. It's an immediate, a true sweep. And then preferably you're going to have your inversion fair value gap right there. That's the trigger to get in long. And what you're going to be aiming for is at a minimum 2 to 1 and or the middle of the opening range and the other side of the opening range. So it hit both targets in this case. Now, we'll talk about this later, but if this entry to the mid of this opening range is less than a 2 to 1, then I'm going to most likely skip that trade. It needs to have some room to make sure you can hit your target, or have a high probability of hitting a target. That's just one little tip that I'll advise. Okay, so here's the bearish Phoenix with an A+ setup. Now, again, we have our 5-minute opening range, and this, I forget what day of the week this was, but remember, Mondays and Fridays, I'll wait until 10 a.m. to engage. So this could be one of those examples where it's just completely left the opening range. So we're not gonna have a tighten play all the way out there, right? So we're paying attention to see, are we gonna hit a key level and may want to revert back towards the opening range. So in this case, what did we hit? We took out an old daily high. So when you put in your previous day high, you may want to put in 2 or 3 previous day highs, especially if they're near each other. And those could be also areas that price may want to react from. So we got the higher time frame. You can see down here, ES did not make it to its corresponding old daily high. That's SMT. Then you have the mini 1 minute sweep. See, just in a couple of candles, we came right back in. And that even had a mini SMT. So that's really good. And then, what time is it? 9:50 macro. Very good. And we have the inversion for the short. A+. So this is, we're going to be targeting. Now, look at this case. Like I said, you need to know that you have room for reward. So from here to here, the middle of the opening range, that's definitely over 2 to 1. You can see it visually. Now, this example here, I'm showing exactly a 2 to 1, which corresponds with the high of the opening range. Now, sometimes you'll tap the opening range and we may get a tighten play and then continue on bullish for whatever higher time frame reasons we have. So I might take the low hanging fruit and just take that high of the opening range if it produces at least a 2 to 1 for me. So you'll be able to figure out how you do targets and your reasons for taking them. But that's sort of how I would think about a day like this. Okay. Now, for all of these ideas, I'm only giving myself 2 maximum attempts per day, 2 trades. So it might be 1 Phoenix, maybe it's a Titan, maybe it's 2 Phoenix. It doesn't matter what the name is. I'm just allowing 2 trades per day because I noticed that after a 3rd loss, potentially, I can definitely go on tilt. So know your limits and have your risk protocols in place. Now, I mentioned that we're aiming for 2 to 1 as our first target. Other targets could be you're aiming for the middle of the opening range or the other side of the opening range. So middle, other side. So that worked in this case. You could trail your stop too. Whatever your methods are, you know, you could apply it here. It's just one idea. So that's it. This one's a little bit shorter because we went into details about the opening range in the last video. But the next one, I will sort of put together a couple more examples and sort of show how one might lead into the other. How would I play it if I'm already in a trade and then the other one shows up? Things like that might come up, and maybe a few more tips and tricks to help avoid some of the stop outs that are avoidable, but the system will have stop outs, so you can't avoid that. Okay, thanks for listening. Let me know if you have any questions.